and welcome back, and a very good afternoon to you from us in Kalkine Studio, live from Sydney. This is Holly Shields and you're watching the Mid-Market Pulse. Let's zoom our lens on over to the Australian share market performance. Well, Australian shares are in an upbeat mood on Wednesday, with the benchmark index ASX 200 extending opening gains on the back of a strong rally in tech, healthcare and telecom stocks. The market staged a strong recovery after opening marginally lower amid weak global cues and stimulus tampering by the Reserve Bank back home. The central bank has taken its first step towards tapering its massive stimulus program by tweaking its quantitative easing to weekly $4 billion bond purchases until November. The central bank, however, kept the official cash rate steady at 0.1% and retained the bond yield target of 10 basis points. The S&P ASX 200 was trading up by 38.40 points, or 0.53% during the mid-market session. During the day's trade so far, the index gained as much as 0.6% to hit a high of 7,306. Unfortunately, the market's gains were capped by concerns around COVID-19 cases in the country's most populous state, New South Wales. In a fresh development, the state government has decided to extend lockdown in Greater Sydney after 27 new cases were recorded. So, Sydney-siders gear up for another week at home because the curbs have been extended until 12:01 a.m. on July 17th, and social distancing restrictions in regional areas have also been extended accordingly. Onto the sectoral front, 8 of 11 sectors are trading in the green. The information technology sector was the best performer with 2.75% in gains. Among others, healthcare, telecom, consumer staples and A-REIT were trading higher over 1%. Meanwhile, the energy sector was the top laggard today with 1.85% in losses after reporting a strong performance in the previous session. Materials and utilities were also trading lower with marginal losses. Looking at the sectoral charter, ASX listed energy stocks were reeling under selling pressure today, snapping 3 session gaining streaks. Index heavyweight Woodside Petroleum, Santos, Oil Search, Origin Energy, Beach Energy as well were all trading lower by the afternoon. And this time it's hats off to the big tech players Nuix, Afterpay, Appen, Zipco and Nearmap, who are among the top gainers. On that note, let's have a look at the top gainers and losers of the day's trade so far. Investment management firm Challenger was the top gainer on the ASX, raising as much as a staggering 12% to $6.13 after the American private equity firm Apollo Global acquired a strategic stake in the company. Some of the other notable gainers were tech firm Nuix, edutech company IDP Education, BNPL, Major Afterpay and data company Appen. On the flip side, healthcare firm Nanosonics was the top loser on the ASX pack, falling 5.2% to $5.10. Coal mining firm Whitehaven Coal, engineering firm Worley, financial services firm Virgin Money, and energy firm Oil Search were among the top laggards. And now it's time for a short break, but stay with us. I'll be right back with more trending updates.
This is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
New Zealand is unique, and Kalkine TV is here to bring you all the latest news and trending market updates. streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at Kalkine TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit kalkine.co.nz.
Welcome back. I'm your host Holly, live from Kalkine Studio in Sydney, and you're watching the Mid-Market Pulse. Moving on, let's have a look at the stocks that are creating a buzz today. Shares of Australian copper gold exploration company Askari Metals made a strong debut on the ASX on Wednesday, surging an impressive 20% to 24 Australian cents in the opening deals. The company had successfully raised $5.75 million at an offer price of 20 cents via an IPO. Askari intends to use the fund's proceeds to explore and develop the portfolio of copper and copper gold projects located in 2 sites in WA. But today, not everyone is winning in the tech space as buy now, pay later player Split Payments shares fell 0.9% to 58 Australian cents after the payment solutions company announced the launch of its in-store offering. Split has launched its in-store offering globally to new and existing merchants, adding to the $450 billion market to the company's total reach. Multiple new notable merchants have signed to the launch with Split in store with over $1 billion in addressable sales volumes. Well, like I mentioned before, the share price of investment management firm Challenger surged over 12% to $6.13 after the American private equity and alternatives firm Apollo Global acquired a $720 million strategic stake. The firm and its insurance affiliate Athene purchased 80.4 million shares via Barrenjoey Capital, extending its stake in the company to a very solid 18%. And bad news from Woodside Petroleum, whose shares fell 2.2% to $23.54 after the oil and gas major announced it has completed its acquisition of FAR's interest in the Rafisk Offshore, Sangomar Offshore, and Deep joint venture. Following the acquisition, Woodside's participating interest in the RSSD joint venture rose 82% for the Sangomar exploitation area and to 90% for the remaining RSSD evaluation areas. Shares of Magellan Financial Group rose 0.5% to $54.16 after the company issued an update on the fund's under management and performance fee. For the June quarter, the funds under management increased to $113.9 billion from $106 billion in the prior quarter. And now it's time for another short break, but don't go anywhere, stay tuned and I'll be back with more trending updates.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Welcome back. I'm your host Holly, live from Kalkine Studio in Sydney. You're watching the Mid-Market Pulse. Let's look at some more trending updates. Sandfire Resources shares were down 0.9% at $6.76 even after the Australian miner was granted a mining license for its Matheo copper mine in Botswana. The contract will have an estimated value of $648 million over an initial term of 7 years and 3 months, with a provision for a 1-year extension. Sandfire and Perenti are continuing work collaboratively towards the finalization of the contract, which is expected in the near term. And software firm BetMakers Technology climbed 1.4% to $1.12 after signing a multi-year live streaming agreement with Sports Information Services and Racecourse Media Group. The deal includes distribution of live horse racing vision and wagering content from Britain and Ireland to be approved Australian corporate bookmakers in Australia. And neuroscience tech firm Cogstate traded flat at $1.04 after Alzheimer's testing business updated about the value of its clinical trials sales in the financial year 21. It executed $11.4 million of clinical trials sales contracts during the June quarter. So quite impressive there. And shares of CIMIC Group traded marginally higher at $19.79 after the engineering firm said that its joint venture firm has secured a contract from the Government of South Australia. CIMIC's joint venture, Ventia, has been awarded the Across Government Facilities Management Arrangement by the Government of South Australia. The deal is expected to deliver revenue of around $300 million over the initial 5-year, 7-month period. And shares of mydeal.com.au rose nearly 8% to 69 Australian cents after the online retail marketplace for home and lifestyle products provided an update ahead of the company's June quarter report. The unaudited results for the financial year 21 show MyDeal has delivered record gross sales of $218.1 million, up a whopping 111% on the prior year. The share price of Eclipse Metals jumped a whopping 14.3% to 2.4 cents after the Uranium Explorer secured Greenland government approval for the Ivitut project. The company said it had received government approval for the initial fieldwork program at the Ivitut project in Greenland. EPM acquired the Ivitut project in January and in May of 2021, and the company had applied for approval of an initial fieldwork program on an exploration license. And now it's time for another short break, but stay tuned and I'll be right back with more trending updates. Welcome back. I'm your host Holly, live from Kalkine Studio, and you're watching the Mid-Market Pulse. On this note, let's shift our focus to the global market performance. On Tuesday, global equity markets traded lower as a slump in crude oil prices and rising expectations of a hawkish Fed report due to be out on Wednesday waved red flags for investors. In the overnight trade, Wall Street ended on a weak note, unfortunately, and the Dow Jones fell 0.6%, while the S&P 500 dropped 0.2%, and tech-heavy Nasdaq Composite registered a gain of 0.17%. Moving on to the Asia-Pacific region, most of the regional stocks were trading lower in the opening deals on Wednesday, tracking weak cues from Wall Street. Japan's Nikkei was trading 0.96% lower, while Singapore's Straits Times fell 0.9% as well. Taiwan's weighted index also trading in the red with marginal losses. Meanwhile, Hong Kong's Hang Seng was down 0.7%, and New Zealand's benchmark S&P NZX 50 fell 0.35 as well. China's Shanghai Composite dropped 0.1% as a crackdown on local tech companies dented market sentiment. In an overnight trade in US stock exchange, DD Global shares slumped as much as 30% to $10.90 US, taking them below the $14 IPO. China's cybersecurity regulator, Cyberspace Administration of China, has ordered the removal of ride-hailing giant Didi Chuxing from China's smartphone app stores, alleging that the companies illegally collected users' personal data without disclosing details. Ironically, the development came just 2 days after Didi made a debut on the New York Stock Exchange at a market value of $68 billion, marking the biggest US listing by a Chinese company since Alibaba raised $25 billion in 2014. The ride-hailing giant had raised $4.4 billion in a mega New York IPO. Well, maybe it's better to walk after all, plus it's an excuse to get outside. And with that, we have to say that is all for now, but stay tuned with Kalkine TV for more live market updates. We'll be back with more news on markets, economies, and diverse themes and sectors. Holly Shields signing off.